haven't I missed Bitcoin? Haven't I missed the run in Bitcoin? Isn't it fully priced at these levels if you given where it started?
Yeah, I mean, look, any asset starts out at a low price and then has volatility. It can go up, it can go down. If you look at something like Amazon, I think Amazon stock when they IPO'd in the late 90s was $18. Today, Amazon's price is over $3,300 per share. And that's not a straight line, right? There's all kinds of splits and everything along the way. Lots of volatility. Amazon stock at one point dropped over 90%. There's also kind of double-digit drawdowns on an annual basis. The average intra-year drawdown of Amazon stock is over 30%. And so when you have a highly volatile asset, the reason why that's happening is because there's innovation. There's a repricing of the asset, right? The world is trying to figure out what is this worth. And so if you had looked at Amazon stock at $18, you could have looked backwards and said, oh, I could have invested in the seed round or in the Series A. I missed it. Now it's a publicly traded company and there's going to be no returns. You would have been wrong. If you had then waited till it was 100 or 250 or 500 or 1,000 or even $2,000, you still along the way would have thought, oh, I missed it. But what you end up finding is for the small few assets that actually are disruptive, that are highly innovative, and that do benefit from true market price discovery, you aren't late. Actually, what ends up happening is you're probably underestimating the future price performance or the future appreciation. You're underestimating how addressable the market is. And so I think an asset like Bitcoin is a perfect example where what you're talking about is about 100 million people globally out of 7.5 billion people in the world. Only 100 million people have any sort of relationship, ownership, or interaction with this asset. And so what you're essentially saying is that 100 million people would be the total addressable market, that it's captured everything that it's going to capture, and there's going to be no one else who's going to want this. And so I think that the belief that it's too late really just kind of refutes or ignores history. And then also is kind of a pessimistic view of the future. It's to say that all of the innovation is done, all of the people who need this have found it, and therefore there's no future kind of value to capture or create. And I just don't agree with that.
How much, in your view, was Bitcoin, as Elon Musk tweeted, sort of inevitable, that people were going to learn about this one hell of an invention, as Ray Dalio called it? And how much of it's driven by the macroeconomic backdrop, this massive expansion of the money supply, money printing by central banks? So did it just accelerate a trend that was already happening, or what's your view of sort of the macroeconomics and how that's driving the adoption of Bitcoin?
Yeah, look, I think that what's really interesting about Bitcoin is I have yet to meet somebody who spends the time, is open-minded, intellectually curious, does the work, learns about Bitcoin, can explain it back in very simple terms, right? Kind of showcasing their understanding, and does not believe that it will have a place in the world. There may be disagreement in terms of how important it will be, or how large it will be, or who will hold it. But I have a very hard time finding anyone who says it will be worthless, right? If they've kind of done the work and become educated on it. So I think that's kind of a key piece. And so what that tells you is that as more and more people learn about it, the inevitability of understanding this will be a thing was always there. Now, what I do think has happened is in the macro environment in terms of monetary policy intervention, and frankly, just a lack of discipline across economies and central banks, is that we essentially had a $3 trillion marketing campaign, or almost $4 trillion marketing campaign running in the United States last year for Bitcoin. And really what it started out as was, hey, there's a public health crisis that is going to lead to an economic crisis. When that economic crisis happens, we are going to have elected officials in the Federal Reserve that's going to step in, they're going to intervene, they're going to manipulate the market to try to mitigate short-term pain. When they did that, anyone who was paying attention said, wait a second, they're going to print a lot of money. There is a fear of inflation, whether it comes or not. We fear that the inflation is coming, and therefore there is a potential issue at hand. And they went on a global scavenger hunt, looking for the best market or asset in which they could move their wealth so that they could protect the purchasing power and benefit from the activities of the central bank. That the inflation hedge bucket of assets is going to do very well in this environment. And inside of that bucket, Bitcoin will be the big winner. Bitcoin will outperform all of the other assets, whether you look at real estate, precious metals, even stocks to some example, et cetera. And so far, and we're not out of the woods yet, but so far, what we have seen is that if you came to that conclusion, you were right. And so I think that, in kind of March of 2020, Bitcoin was trading somewhere between like $8,000 to $10,000. And I think it was March 12th, it literally fell below $4,000, right? I mean, just absolute fell off a cliff. At that time, there was a lot of people who said it's going to zero. But what I continued to tell people, and I think was really important to understand, was we were in a liquidity crisis. And during a liquidity crisis, investors sell off any asset that has a liquid market so that they can raise dollars, right? The dollar strengthens, asset prices sell off, you get correlations going towards one, and that's what happened to Bitcoin, happened to gold, happened to stocks, and all kind of across the board. But now all of a sudden, as there was this liquidity injected into the market, and you literally just had a system that was flush with cash, everyone ran for protection. And Bitcoin ended up being the great beneficiary of that. What I think has happened is not only an acceleration of just the adoption in terms of individuals and some financial institutions buying it, but I think actually psychologically, people were reminded we live in a system that is guaranteed for the dollar to lose value. And it is a system in which if you can find a capped supply asset where demand will continue to increase over time and has utility as both a store of value and a medium of exchange, it is likely to do much, much better because of the programmatic monetary policy and the decentralized security that it brings. And so that's where you see kind of people going from, I know nothing about Bitcoin, I don't want to spend the time on it, I've got a pretty good life, to now rotating and saying, wait a minute, this is the most important invention, right? Or this is something I'm going to go take literally 90+% of my balance sheet, I'm going to go convert it from dollars